Very good evening to all of you, and welcome to the one last presentation for the month of September. So, let me begin with the market performance as usual. I will be talking about the highlights from the stock market this week, and then I'll move into look at some key economic highlights, and then some important news and highlights from the international context will also be presented today as usual. So, looking at the market actually gained a negative start for the last week of the month of September, with having points declining in both the indices SPI and S&P SL 20. So, SPI lost 120 points to close at 9,844.21, whereas S&P SL 20 index also lost 46 points to close at 3,156.90. So, despite the discussions on debt restructuring as that was initiated in last Friday, investors didn't actually perceive much effect on the market sentiment. So, it remained to be somewhat negative with the elevated month end margin selling. So, with having points declining in both the indices, the turnover yet picked up to report a value of 4.5 billion, and that even basically aided by the foreign purchases or foreign buying in the expo counter, which was continually happening for last couple of sessions. So, as a result of that, foreign purchases picked up to report a value of around 2 billion, on contrary to 354 million worth of sales reported. And but anyhow, during Tuesday's trading session, the market gained some sort of a turnaround, and it bounced back to positive territory with having 17 points upward momentum in the SPI to close at 9,861.62, and S&P SL 20 index also gave also taken around 7 points to close at 3,164.51. And looking at the turnover levels that even get higher or increased higher to report a value of 5.8 billion, a higher value compared to that of previous day, and that even aided by the foreign buying of the expo counter, which reported a higher value to pick up foreign purchases to a value of around 2.3 billion, and just 327 million worth of foreign sales reported, on contrary to 2.3 billion worth of foreign purchases. So with that, the turnover levels picked up. And during Wednesday's trading session, also market continued to be in the green territory, and SPI gained 97 points to close at 9,958.87, and the S&P SL 20 index also gained 19 points to close at 3,184.48. So market participants were expecting sort of a reduction in interest rates, the treasury yields and the bond yields. So majority of the banking sector counters picked up during Wednesday's trading session. And during the day, turnover, however, lowered to a reported value of 3.1 billion. That was without the aid from the expo buying. So foreign purchases and sales remained at a lower level compared to that of previous 2 days. So just 72 million worth of foreign purchases reported, on contrary to 50 million worth of foreign sales, yet having higher foreign purchases compared to that of foreign sales. Net foreign inflow was reported during Wednesday's trading session. Despite treasury yields steadied when it comes having slight decline compared to that of previous week, with the increase of bond yields during Thursday's trading session, market actually witnessed a decline, and result in decline in points in terms of both the indices. So SPI declined 7 points, or declined by 7 points to close at 9,951.48, and S&P SL 20 index also lost 15 points to close at 3,168.90. And together with that, even during Friday's trading session, SPI lost further 20 points to close for the week at closed for the month at 9,931.07, and S&P SL 20 index also lost another 3 points to close at 3,165.3. So the turnover levels during the last couple of sessions was reported just a value of 3.4 billion and 2.6 billion, which was lower than the average turnover. And foreign purchases, however, picked up during both of these days, but remained to be lower value. So during Thursday's trading session, foreign purchases stood up a value of 140 million, with having 94 million worth of foreign sales, and during Friday's trading session, foreign purchases stood at 209 million and 140 million worth of foreign sales were reported. So throughout the week, SPI actually witnessed a decline of 0.34%, and S&P SL 20 index also lost 1.18%. However, net foreign inflow was reported with the aid from Expo Counter, and that report a total value of 4 billion. And let me take you through the treasury yields. So, as I previously mentioned, treasury yields slightly declined. So, in terms of 3-month yield, it witnessed a decline of just 1 basis point to have a yield of 31.94%, and 6-month yield is now at 30.59%, which actually witnessed a decline of 4 basis points from its previous value of 30.63%, and 12-month yield is also standing at 29.85%, with having 2 basis points reduction from the previous week's treasury yield. So if we look at the composition of this week's treasury yield, treasury bills auction, 3-month under 3-month yield category, the central bank only offered 35,000 treasuries, but the bids were received for 95,162 treasuries, and only 72,983 treasuries have been accepted, and that is higher than the offered value, and were only around 4,000 from each of the 6 yield category and 12 yield category were accepted. So that hints the investors have much more of a keen toward investing in 3-month treasury yield, because the long-term outlook is somewhat negative, and it hinted that the interest rates at this level cannot persist for a longer time period, and there is a tendency for them to go up with the external pressure, especially from the global context, with most of the economies or most of the central banks having interest rate hikes and the tensions to exchange rate, and that have a direct impact on Sri Lankan economy as well. And looking at the spot rates, the LKR in terms of USD remained to be at the same value, with not having much of an appreciation or depreciation. But in terms of other 3 currencies, LKR resulted slight appreciations. And let me move into some economic highlights. So, as of Sri Lanka Customs, the data they have released for the month of August, the export sector of Sri Lanka in terms of merchandise exports report a value of $1.2 billion for the month of August, on contrary to 1.1 billion exports resulted in the previous year comparative period, and that witnessed an increase of year-on-year 10.24%. So apparel and textile sector dominated to result the said increase in merchandise exports. So for the month of August in 2022, the apparel and textile category resulted a total export income of $565 million, and that was just $492 million in the August in the previous year 2021, which represent an increase of 15.03%. So altogether, cumulative export income from this counter, apparel and textile counter, is standing at around 4 billion. And apart from the contribution from apparel and textile sector, tea sector also followed with an the export income of $124 million, and rubber-based products then followed tea by reporting an export income of 99.83 million. And the top export destinations for Sri Lanka are noted to be United States, and it was followed by United Kingdom, India, and Germany. So the service sector exports are expected to report a value of 1.3 billion for the year so far for the cumulative period. And these are the basics from Sri Lanka's export performance in the month of August. And apart from that, World Bank has slashed economic outlook for Asia Pacific region, pointing out the China's economic slowdown owing to their zero COVID policy to drag down regional growth. And this is after Asian Development Bank's lowering of economic outlook for South Asia and also for Sri Lanka. So the Asian Development Bank is expecting a 6.5% growth for 2022 for the South Asia region, and that was marginally lower from the initial estimation of 7% in the month of April. And that is basically added to India's higher than anticipated monetary tightening effect on lowering their economic growth, and combining with that Sri Lanka's economic contraction. So the Asian Development Bank has given a negative outlook for Sri Lanka's economic growth for the year 2022 with negative 8.8%, and that was initially they were expecting 2.4% growth for the year 2022 in terms of Sri Lankan economy. And for 2023, the next year, the ADB is expecting Sri Lanka to witness again a negative economic growth of 3.3%, which was initially a positive growth of 2.5%. So South Asia inflation is projected to report a percentage of 8.1% in the year 2022, and that was basically due to the rise in global commodity prices, and that causes an acceleration of inflation in countries like India, Pakistan, and Israel. So with these reasons, ADB has lowered their economic outlook for South Asia region, and especially for Sri Lanka. And let me take you through some quick review on the international financial markets and commodity markets. So for the week, commodity markets have witnessed an upsurge, which is contrary to international financial markets. So the oil prices advances with possible expectations on OPEC Plus to agreeing in cutting down their outputs, and that was even aided by the weakened dollar, and that also positively impacted on gold to reach a weekly gain for this week. And copper prices and aluminium prices also witnessed increases for the week, and copper prices has advanced from 2-month low with the demand from the China. They are reporting strongest volume since 2020. So with that, the copper prices increased for the week, but the international stocks markets negatively reacted for another week with some negative expectations regarding economic slowdown and with the aggressive monetary policy tightening and all. So with that, the most of the world stocks negatively reacted and resulted declines for the week. But however, during Friday's trading session, Indian shares advanced on the back of bank and metal stocks, despite their recent policy rate hike by the central bank. So the Reserve Bank of India has very recently decided to raise their repo rates by another 50 basis points on fourth consecutive term to 5.9%. So with all of these reasons, if you look at the context, most of the global economies are in chaos stemmed from interest rate hikes, increasing inflation, and contraction in production and output, and also the unemployment rates are increasing. So it's mostly obvious that the world is gradually going towards to experience a recession in the next year. So, with these concluding thoughts, I would like to hand over the presentation to Harin. Harin, over to you.
Thank you, Sachini, for the fundamentals update. So as of yesterday, we were able to see the prices trading above the daily support 82 US dollars per barrel. And now the price has fallen below that key level of daily support, making it a daily resistance now. So this coming week, we might be able to see it this daily support level may initially become a daily resistance level. So the price needs to sustain below 82 in order to become it a strong daily resistance. If the price manages to come above the daily resistance, we might be able to see again becoming a daily support level. So we have a low at 76.28, which is basically the 26 September low. So that could be tested if the price sustains below the level of 80. If the price comes above the level of 80, we have 85.74, and also the top line of the descending trend. So that could be tested as well if the price manages to break that key level, and also 85.74. We have the next daily resistance at 1992. The EMAs indicate, which I have added, basically are 20 and 50. So these EMAs indicate a short to medium term bearish momentum as the price is trading below the moving averages. The RSI also closed at in the mid range, which is 39.78 at the moment. So this daily resistance would become an official key level by next week, as the price continues to fall below the below this key level. So we need to wait till it officially closes below and starts trade below the level of 80, and therefore this might take another few days for us. So looking at the all share index, so ASPI, the RSI managed to close at the weekly RSI managed to close at 60.6, and the index seems to got rejected from the key area of weekly resistance 10,050, 10,250. Since this is the weekly chart, there's not much of a clear updates. Last week also I clearly mentioned that if this weekly resistance breaks, we have the next key level of psychological area at 11,000. So continuous rejection from this weekly resistance could bring down the index to 200 EMA, which is basically from the daily chart, we can clearly see that it's at 9,804. So once it was tested and the index got rejected from that key area, which was basically on 27th of September. So once again, from the weekly chart, we have this clear overlook. So the index is trading above both 50 and 200 EMAs. This surely indicates a short-term to medium term bullish momentum. So this week also we had a low of 9,765.7 and managed to close at 9,931.1. So initially it opened at 9,964.8. So this weekly resistance could be once again tested 10,050, 10,250. Breaking above that key level only will be able to see it going further towards the next key level of level 1,000. This week our topic of the week would be RIL property PLC, which is real. So in real, we were able to see this weekly resistance. There's a weekly resistance at 7.58, where the price initially got rejected also from the 50 moving average, and we have a strong high at 9 rupees, which is 20, which is basically the August month high. So that could be tested only if the price manages to break this weekly resistance 7.58. So continuous rejection from this key level would bring down the price to 6.5, and also the bottom line of the ascending channel. So that could be tested as well. So the next key level would be 6.5, and this weekly resistance also 7.58 could be is the next weekly resistance, and this key level of support is at 6.5, and further the next support level is 5.5. So once it breaks the weekly resistance 7.58, the price of 9 would be tested. And so far the price is actually trading below both 20 and 50 moving averages. So this also gives us a negative trend in the market for RIL, because moving averages, this 2050 is mostly short to medium term. Therefore, if the price manages to close above 50 and starts to trade above 50 moving average only, it gives us a strong bullish momentum. Long as it gets rejected and is trading below 20 to 50, is would indicate a short term to medium term bearish momentum. RSI console level of the weekly RSI console level of 45.33, and the daily RSI console level of 40.34. So that's the clear outlook from my end, and I hope you all enjoy the video. Please do like and subscribe. Have a great weekend. Thank you very much.